So years 1 and 2 will probably be in that 4 or 5, 5.5% cash on cash range. And then that will build to 7 to 8%, and then ultimately 9 to 10% on the last couple of years to average back into that 7 to 8% cash on cash. Total equity multiple will be in that 1.7 to 1.85 range.
So let's focus like a laser on that first one. I like it. You're doing 50% office to flex. So it's going to be a conversion, right? To make it more useful and obviously kind of drive the rents. So what type of returns is someone looking at if they put $1 million in on average? What can they be expected in year one and then over maybe a 3 to 5 year period?
So it is value add deal. And so those are the first 3 deals that will go into it. The whole portfolio will be 7 to 11 assets. But because it is value add, your year 1 is going to be much lower cash on cash than your year 5. So it's a 5-year closed-ended fund, by the way. And so it'll all close out December of 2028. So years 1 and 2 will probably be in that 4 or 5, 5.5% cash on cash range. And then that will build to 7 to 8%, and then ultimately 9 to 10% on the last couple of years to average back into that 7 to 8% cash on cash. Total equity multiple will be in that 1.7 to 1.85 range over the 5-year with the IRR 15 plus.
Got it. Excellent. And then you're also doing cost seg on that to get some bonus depreciation, offset some of the tax flow there?
Yep. We cost seg everything that we own. And we put that straight through pari passu to our investors on ownership. We don't take a larger rate or anything like that off the top, which I think some sponsors do. But yeah, we just distribute that directly back out. So very good on the tax deferred piece. And yeah.